Understanding Capital Gains, a beginner's guide. Hello and welcome. Today, we're going to dive into an important financial concept that can affect everyone: capital gains. Whether you're just starting to invest, selling a property, or simply curious about how your earnings can be taxed, understanding capital gains is crucial. So, let's break it down together in a simple, easy-to-understand manner. Capital gains refer to the profit you earn when you sell an asset for more than its original purchase price. These assets can be anything from stocks and bonds to real estate or even precious items like art and jewelry. The key point here is that you don't actually earn capital gains until you sell the asset and realize the profit. If your assets increase in value but you haven't sold them, those are called unrealized gains. There are mainly two types of capital gains: short-term and long-term. The distinction is crucial because it affects how much tax you will pay. 1. Short-term capital gains. These are gains from the sale of assets held for 1 year or less. They are taxed at the same rate as your regular income, so depending on your income bracket, this rate could be quite high. 2. Long-term capital gains. These are gains from the sale of assets held for more than 1 year. They are taxed at a lower rate than short-term gains, which is beneficial for long-term investors. Understanding how capital gains are taxed is important for planning your investments and sales. The tax rate can vary based on several factors. 1. Type of asset. Different assets may be taxed differently. 2. Holding period. As mentioned, long-term gains generally enjoy lower tax rates compared to short-term gains. 3. Your income bracket. Your overall income can affect the rate at which your gains are taxed. Remember, some specific rules or exceptions could apply depending on your country's tax laws. Understanding capital gains is more than just a matter of compliance. It's about making smart investment decisions. Knowing how gains are taxed can influence when or if you decide to sell an asset. Planning for the future. Effective tax planning can help you save money and invest it back for future growth. Legal compliance. Properly reporting capital gains ensures you're on the right side of the law. Capital gains might seem complex at first, but understanding them is a powerful step towards financial literacy and independence. Whether you're investing in stocks, real estate, or other assets, being aware of how your profits will be taxed helps you make informed decisions. We hope this video has shed some light on the concept of capital gains. Until next time, happy learning and smart investing.